We crushed a 1 to 6 collective risk to reward trade on GBP USD. We highlighted it to the community, and this is how you could have done it also. So a little bit of context on GBP USD. I started the week off on Monday. We wanted to see price develop and reach a bit of a base point. Now, I'm not going to scroll all the way back because it will take too long, but you can check out how 1.2300 was a previous accumulation zone that provided volume in the market before a massive expansion run. So that was our mitigation point. That was the first area that I was interested in revisiting on GBP USD. We can see how price did ultimately get to that level and provided us with a shift in momentum. So we had a change in character of the overall direction of this market. We provided a nice run to the downside after sweeping a previous low and an immediate shift higher. So that to me was an indication that buyers had come back into the market and they were interested in actually wanting to purchase the pound against the US dollar. As the market then created and left a pretty strong daily close, we see that how the Asian range was then created. If we go and slap that on here, you can see highlighted here in this blue box that the Asian range delineated by time. We drew the opposite side of the market to our overall direction. So I get questions all the time, between type 1, type 2, type 3. How do we know which one it is going to be? Well, effectively, if we have a directional momentum bias in mind, I always like to see the market pull against that overall bias before trending in our overall direction. And that's kind of the premise of what we look for in a type 1 setup. I call it a red panty night setup. It's our best, it's our A-star setup where we want to go and target, obviously, external liquidity points. So we can see how we did break out to the downside initially, and we came and mitigated here at this 15-minute candle of interest. I often refer to these as slight pit stop candles. They're candles that sort of paused momentum for a period of time and then immediately continued. So what was the point of it? What was the point? What's the storyline behind that candle right there? We can see that price did get into it, and then it was about waiting for momentum to get back in my favor again. So if we go into the 5-minute time frame, we can see exactly how we took this trade. So the 5-minute, we can see that the market did push down. We made a low, we made a high, we made a low, and then we made a lower high before shifting and rejecting the mitigation point. I can't tell you how much of a difference my trading has had when I allow for price to get into my higher time frame levels and then wait for the lower time frame shift in momentum. Then it's about finding the execution model. So I had an entry in and around this 1.23375 level, nicely in that inefficiently priced market. Then it was a case of setting my stop loss. I worked in around about a 15 pip stop loss on this perspective, and I was looking to target the higher areas of the range. So we can see that we've got the Asian range high, we've got the liquidity target here. And if I just step up once again, we can see how price did ultimately go and reach my external range high. Now that was always my target. I've got an overall perspective of GBP USD that I think we can revisit 1.2500, and we'll get onto that at a later stage. Now, as the market nearly got to that level, we pulled away. So although I nearly smacked a 1 to 4 risk to reward on that position, it didn't actually go and hit my target. Whereas most people would sort of panic, close out their positions, and then try re-enter, maybe try sell the market. It's all about being very, very specific as to why the market should go to a specific level. So as the market pulled back, we were on the session, I was talking about how once we break above and retest, there's an area inside of the Asian range that we like to utilize. So that 50% range is a great equilibrium range of where the market has set itself up for the day. As we can see, the market did make that opportunity with an inefficiently priced range. We utilized the level of the mean threshold here, and we managed to get a second opportunity because we hadn't previously actually taken out the overall high just yet. So I was able to double up my position with correct risk management, and collectively we had a 1.37 achieved, and we also had a 1.3 achieved. So we managed to do a collective 1.6 risk to reward, and it was a fantastic day in the market utilizing both Asian range strategies, retest and re-entry strategies, and again proving that having a target is so much more important than just focusing on your entries.